Hello friends, good week. How are you? Vladimir here with you, and this is the weekly review for 13th of February 2012. Well, the Greece story is not ended yet, but the Greece Parliament approved the last conditions from European zone, the Europe leaders, to cut their debts and to cut their expenses. So they approved it. Now it's about to go for last vote and for last confirmations. But the question is how it's actually going to affect, right? The question is how it's actually going to affect. It seems like the market is already represents the possible, right? The possible bullish mood. Um, well, from this zone. The question is if they approve it, right? And if Europe will give the money, is that going to change something? Well, if we take a look on daily charts, we can see the charts are very, very, very confusing on many pairs, on many pairs. And let's start and see what and how we might have and how we can join possibly during this week. So let's start with New Zealandian dollar based to daily chart, right? If we count the long term moves, we have 1, 2, now we experience 3, now we're in the middle of 4, and we should have one more higher. After the divergence, we get the move. We are almost in the 20 MA, pretty very close. So the question is where we are going next. Let's take a look on some interesting things. First of all, the short term line, this one, the last line, right now being tested. The previous line, this one, has been broken, right? You can see it better on the 4-hour charts. The long line is still here, the spikes line is here, right? But the long run, the shorter line has been broken. Now let's go inside the prices. If we have a break below this line, most likely the prices will go down as well, maybe 100 pips more, around 081.50. Based to daily chart here, right, we had more than 20 candles, right? So the ride back to this area, this support area approximately, right, right back to this area is very possible. Should it happen in one day? I'm very doubt. I believe it's going to make something like here, some retraces maybe, some fight maybe, and then to close the gaps like here, something like that. So once again, it seems like we are going for the opposite boundary band, right, based on the rules of 20 candles. But should it be straight? I'm very doubt. If we take a look on the intraday charts, on the 1-hour charts, we can see there is most likely going to be a divergence, right? Now it's going to be somewhere below. We should see a retrace, and then most likely the price will continue. But based on 1-hour chart, we had also 1, 2, 3, 4, and now we're experiencing the 5. After 5, we should have A, B, C, and then continuation down. So how it's going to be, and how the week is going to open with the last news from Greece? That's the question. How I would look to join? Well, first of all, this support line. If this support line will be broken, then I have pretty much no doubts that we are going as low as for the next support here, as I said before, right? That's how I would look to join the New Zealandian dollar. Now, if it does not begin from here, I would look to join after the retrace. Based to 1-hour chart, we had 5th move, and we should see like 1, 2, 3 up, right, before the next down move. But on 4-hour charts, we had only 1, 2, 3, and we should experience some 4, and then we should get a 5. That's based on the technical rules. So two ways. If the prices go straight down, break this support area around the 080 to 30, breaks below, holds, retesting and holds, not closing above again, that's a sell all the way to 081.50 target, or even lower, who knows. But if it goes higher and makes a flag, right? I would be looking to sell from these areas around somewhere in between 083 to 83.20. That's the maximum this retrace should get us. And then we can go from 4-hour charts to 1-hour chart down and look for possible continuing divergence, possible divergences here that will be created that will allow us to sell. We have two scenarios to look for a sell. And why for a sell specifically? Well, because of the daily divergence. Now, what will hold the buy? Well, if we actually get a stop here, right, on this line around the 20 MA, if we get a stop, if we have some bullish pattern and retrace, and the stochastic will cross up again, that will be considered as a stop, a bullish stop. And based on weekly chart, well, MACD positive, RSI positive, only stochastic is oversold. Based on weekly, we still have more to go up. The question is when it's about to continue. As for now, my recommendation to look for a sell. Euro dollar, I prefer to stay out of this pair. It's too from my point of view, it's too sensitive to any change. I would say that another break below 131 and hold below should and most likely would open the doors for another down move. Remember the weekly chart. Weekly chart stopped on the 20 MA of the weekly chart. Now the question is what's next. Stochastic still very bullish, MACD still bullish but holds on the zero. RSI is fighting around the 50 area. Very critical days. I would stay out. The next interesting pair I think we might find some opportunities will be the euro against the Australian against the dollar. Same story as with the New Zealandian. It seems like we should go to test this line, but this line has to be broken first, which is the 20 MA. So what we will be looking for is a break below this line, is retesting the line and holds below, of course, and then look on intraday charts like 4 hours and 1 hour chart for this retrace, and then look for possible sell. The possible sell could take us all the way into 20 MA, to 200 moving average, or even little higher. Let's see how the week. It's very pay attention, very sensitive, as from one side we have the technical rules, from other side we have confirmations and improvements for the HELP program to Greece. So the charts could reset themselves based on the rules, and we should follow the opening of this week and see how it reacts. The next interesting thing will be on indices. From my point of view, as I said not once, indices are about to make big corrections. Based on weekly chart, we are overbought already. We have a stiff resistances area. It seems like we are about to have a correction. I believe that S&P will go and test this line, the long line, this one, the long-term line. It should go and play. I believe it could go as low as to 1300 again. If and when this line will be broken, we will discuss about long short move. But as for now, from my point of view, it's about to play. It could go a little higher, but then it should continue the down move. I do expect all indices, also Nasdaq, especially Nasdaq maybe, to make the down move, to make the retrace down. Based on continuing divergence, RSI is overbought extremely. So during the next days, maybe weeks, it will build itself and make the correction down. Same story, of course, with the Dow, and same story about any indices you would like to see. Right, so my expectations are bearish. Break below 20 MA should open the doors lower for all of them. Euro against the franc, 4 hour charts. See that? Bullish hammer. RSI blocked on 50. Right? We have bullish hidden divergence. That's a buy signal. Set a stop loss below 120. Why below 120? Because this is the minimum that the Swiss bank should allow, and set your target long away around 124. It seems like during the next weeks the pair should go again 124 or even higher. Euro franc is a bullish signal, bullish hammer on the Bollinger. RSI holds 50, possible bullish hidden divergence. Also on the histogram, right? And also on the line, on the trend line. Stop loss below 120, I would say 119.50, 119, and 124 is target, 125 even. That's for long run, possible down move. Gold, no idea. Seriously, no idea. I've been talking about a possible down move, if you remember, for the 20 MA. Reached, happened. What's next? No idea. If we have a break below this area and hold below 1700, we continue lower. If not, no idea, stay neutral. I would say, in other words, as long as it's below 1750, 1755, it's bearish. It will get a bearish momentum if it breaks below 1700, and it will become bullish if it breaks 1755. That's the expectation for the gold. Right? Now let's move forward. And let's take a look here on some interesting pairs. Swiss yen. Well, based to weekly divergence, we still have more to go, right? We still have more to go, and most likely we will. Based to daily chart, there is a clear resistance. There is a divergence now, so we should see some lower move, but then easily the prices might retrace and break this area. If it breaks the daily chart above 85.30, pay attention, and close and hold above, from my point of view, the pair should continue to the 200 moving average, or in other words, the pair should continue to 87 here, right? And then maybe then maybe even all the way to 89, around 87, maybe a little lower, right? First target. If it breaks the current resistance, of course, the 85.30, and holds, very important, holds above, then we can consider the up move to the 200 moving average through 87. Euro yen, same story. We have more to go, right? If we take a look, we have a resistance right now, right here, a break. Now we had a break and a retest, right? If it holds above this area, right, we most likely will aim the 104.50, and then maybe even the whole way back to 107, which is 200 moving average. That's why I say I would stay careful from the euro. It might affect all the rest. And based to weekly chart, we could go. We have more room to go, and the euro yen should go higher. Look for buy opportunities. Look for buy opportunities. The buy could hold above the 102.60, 50, 60, or retrace to 20 MA, to this line, retrace to daily 20 MA, stop here around the 105, 101, 101.50, and retrace up with a break through this resistance, right? And go for the next one, 104.50, and next one, 107, 106.50, 107. That's my expectations for euro yen. They could easily go higher. The only bearish scenario I can expect for euro yen is if it will hold, and first of all, if it will break this line, the 20 MA, daily 20 MA, only then I would consider a possible down move. But until then, very, 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 very bullish sign. And I would say that's enough, friends. I would say that's enough. Well, because let's see how the weekend is, how the week will open, because many things happen during this week, especially around Greece. And during the weekend, we also get new confirmations from the Greece government. So let's see, first of all, how the market reacts. And just make sure to follow also the blog, also of course the live room, and my updates. My updates on Facebook, on the blog every day, and you will see if, why, and when I change any of my opinions, any of my stands. And this is what I expect for the week, but of course, once again, everything now is sensitive. Everything could change immediately with the opening of the week because of the news from Greece. So that's why, right? That's why we have to be careful. And if there will be change, if there will be things needed to be updated, I will immediately update you. So friend, thank you very much for watching this video. Be careful for the opening, make sure to follow the updates, and the next trade will update. And look for possible bearish trades for New Zealandian, Australian. From my point of view, they seem to be the best. Thank you very much, and I hope you have a nice time, and you had a beautiful weekend, and I wish you a wonderful week. Vladimir, bye bye.